Hello and welcome to Business Today. I am Siddharth Zarabi, and with me today, the Managing Director and Chief Executive Officer of Tata Steel, TV, Narendran. Welcome to Business Today, TV. The street seems to be happy with the first quarter earnings that you have announced, better than estimates. So what really worked for Tata Steel this quarter?
Thanks, Siddharth, for having me on the show. I think a couple of reasons. One is, of course, our European units did very well. They've had their best ever quarter. They've leveraged the fact that we have a lot of long-term contracts at higher prices, which were negotiated earlier in the year. So that translated into good profits for Europe. In India, we did a good job of selling in the domestic market because exports was no longer an option after the export duty. And I think the team pivoted well and managed to leverage the deep relationships we have in the domestic market, the stockyard network we have, the distribution network we have, and the brands that we have to sell what we needed to sell. So we didn't have to cut any production, and we sold most of what we produced.
What's your sense as far as the outlook is concerned, both from a point of view of profitability and margins in the weeks and months ahead?
So we will see a margin compression in Q2 because the steel prices dropped between April and June. So Q2 will be more reflective of June prices than April prices. So very clearly, we will see a margin compression in this quarter, both in Europe and in India. But we will also start seeing the impact of lower coking coal prices by the end of the quarter. So it will not help us in July and August, but will certainly start helping us in September and will very clearly help us in Q3 because the coal that we are buying today is $150 cheaper than the coal we bought in Q1. So that will start helping us September onwards. The third thing is we will see a volume expansion. We will see that the sales this quarter in Q2 will be higher than the sales in Q1 because steel prices seem to have bottomed out. Demand is coming back. So we'll be selling at least 500,000 tons more in Q2 than we did in Q1. In Q3 and Q4, I expect the recovery to be very strong in India. And hence we expect a good Q3 and Q4.
You've given me several points to ask you, and I'll try and take them up very quickly. The first one really is about coal prices. Do you think they are now going to settle down? Is the sort of volatility that we saw in the overall energy basket on account of global factors, has that dissipated?
Yes and no. If you see coking coal prices, they went up to over $600 when the conflict started in Russia and Ukraine. And that is what triggered the steel price increases in March and April. Since then, it's dropped. Now it is around $230. So that's a positive for the steel industry. But with Europe trying to wean away from Russian gas, they've started buying thermal coal. So we've seen an unusual situation where thermal coal prices, which traditionally are lower than coking coal prices, are today higher than coking coal prices. So that's impacting us indirectly because a lot of our competition in long products uses DRI to make steel, and that DRI is dependent on thermal coal prices, right? So it's a kind of different kind of impact which we are seeing. In Europe, gas prices have been going up, again, because of concerns about the conflict. So that is an impact that is there. So we are managing this bundle of energy prices very carefully. I think we've taken positions in terms of hedging ourselves as far as gas prices in Europe are concerned. Coking coal is, of course, coming down, so that's helpful. And on thermal coal, we are watching the prices and deciding on our DRI production accordingly.
TV, I want you to provide us whatever color to our viewers that you can as far as domestic demand is concerned. From a sectoral point of view, what parts of the domestic economy are consuming more steel, and where do you still see scope for improvement in terms of demand?
So the biggest story in domestic consumption has been led by the auto sector. After a long time, we saw a very strong quarter for the auto sector, led by the medium and heavy commercial vehicles, the light commercial vehicles. Passenger vehicles were strong. Two-wheelers started picking up again, and tractors has also been strong. So across the board, we saw a very healthy Q1 for the auto sector, and it continues particularly for passenger vehicles. I think in July, passenger car production in India will cross 400,000 after a very, very long time. In commercial vehicles, the heavy commercial vehicles have slowed down a little bit because of the lull in construction activity during the monsoons and some lull in mining activity because of the export duty on iron ore. But the light commercial vehicles, which depends on the e-commerce segment, is strong. Tractors continue to be strong. Two-wheelers, which were a bit weak, are picking up because offices are opening and people are getting back to normal commuting. So auto has been a good story. Construction has been normal, but I think we'll see it pick up significantly after the monsoons. Construction had slowed down in Q1 because input costs had gone up very significantly, which slowed down some of the projects. But I think that is behind us. Many other segments are very strong in India. If you look at the oil and gas, it's strong. Railways has released a lot of orders for wagons. So that's, again, a very big positive. The water mission is also some great work going on. So we expect H2 to be very strong. So I think overall, the Indian demand story is good. There's been a bit of postponement of purchase because of the volatility. And some of the segments like tubes, etc., for whom the input costs are very, the steel is maybe 70-80% of the total cost of a pipe. They have all been postponing purchases in a soft market where the steel prices have been falling. But I think once the prices have stabilized as it has now, I think demand is coming back. So across sectors, we see good activity, and the monsoon slows things down a bit. But Q3 onwards, we expect good demand to come back in India.
What is your outlook on pricing, since you spoke about that just now, over the next couple of quarters?
I think prices have pretty much reached the bottom for two reasons. One is, if you look at today's prices, the Chinese are not making money at today's prices. They're buying coking coal at much higher prices because they don't buy from Australia. So they're already losing money, and we are seeing production being cut. The other thing which is happening in China is there are steps being taken to address the slowness in the property markets. I think there's a property fund which has just been created 2-3 days back. So I expect the Chinese economy to bounce back and the steel production also to be curtailed a bit. So there will be better balance there. So steel prices, I think, will stabilize now and will start creeping up, hopefully, in Q3 and Q4, or if not later this month. Even if you look at long products, some long products have already started moving up in the last few days. So we're starting to see more stability and more upside than downside.
Between Q3 and Q4, when do you expect to take a call on hiking prices?
Well, for long products, already the prices have started going up. I think we've already increased prices a bit this month. Flat products, I expect that by September, things will start moving up.
Okay. We spoke about the export duty, and the industry has made representations to the government. Do you have any signals as to whether that demand could be met, and if so, when?
So one thing is clear, the government has told us that this is temporary. This is not a permanent measure, because the point we made is India should be exporting a lot of steel. Why should we discourage exports? If Japan and Korea can export 30-40 million tons of steel after importing raw material, why shouldn't India, which has its own iron ore, not be exporting steel? And steel companies basically invest in some of the poorest parts of the country and creates jobs far away from the urban centers. So why should India not be an exporter of 30, 40, 50 million tons, even 100 million tons of steel? So that's a fundamental point. I think the government agrees with that. Just now, the measure was more to deal with inflation, and they recognize that in the long term, India should be a good exporter and a big exporter of steel. So we expect it to be removed. I don't know when. We hope sooner the better, because if the objective was to keep steel prices at a more manageable level, I think that objective has been achieved. So I think this is a good time to remove the export duty, but let's see what the government does.
Since we spoke about inflation, and you made that point a couple of times, we had just spoken with the chief economic advisor, and one of the key headline points that he made, and he was talking about not just India but globally as well, that perhaps the inflation scare seems to have now reached a point where it's probably peaked. What's your own sense about concerns around inflation, not just in India, but in all the other global places that you do business in?
So there are two sides to the inflation, and I think part of it is caused by supply side issues, and part of it is caused by demand side issues. So if you look at the supply side issues, in between, there was a lot of inflationary pressures because of disruptions of supply chains, post-pandemic, and also because of the conflict in Europe. I think all that supply chains have readjusted. Even if you look at semiconductors, for instance, the supply has more or less got balanced. So I think the supply side issues have got sorted out on inflation. On the other side, of course, is if you look at Europe or the US, unemployment is very low. So there's a wage inflation which is going on. Energy costs always a concern, but I think as Europe finds alternate sources of energy, whether it's LNG, etc., or coal, we will see some sort of easing of those kind of pressures. So inflation obviously hurts the lower income much more, and hence consumption gets impacted, etc. Food inflation also, if now the issue between Ukraine and Russia is getting sorted out to allow wheat exports, then hopefully the food inflation part also gets addressed a bit. So I tend to agree that maybe with the actions being taken by the central banks, as well as the actions being taken to sort out supply chain issues, hopefully inflation will start settling. We look forward to that. More from a Tata Steel point of view, I think over the last few years, we've tried to keep our balance sheet light, reduce our debt, so that if interest rates goes up, we are less vulnerable to the consequences of that.
One final point, and this is really from you to your shareholders who may be watching. In terms of profitability from the domestic business, and you've had better quarters in the recent past, what kind of guidance can you offer them?
No, all I will say is Q2, you will see margin compression, but Q3 and Q4 should be a very strong recovery. But Q2, some of the margin compression will be offset by better volumes in Q2 than we had in Q1. So I will leave it at that and not give anything more specific as guidance.
Well, that's fair enough, TV, that you provided us those color on the numbers and the performance, and I wish you all the very best for the business in the coming quarters. Thank you very much for your time with us today.
Thank you, Siddharth.
If you like the video, do like, comment, share and subscribe.